Hello, greetings to dear friends. In this section, we want to delve into indicators plotting using Python. Here, to examine the impact of the lengths of the SMA on the results, we use plotting with Matplotlib. Using the abbreviation PLT from Matplotlib, I access the Matplotlib library and call the plot function from it. Here, initially, I defined two variables with names related to the lengths of the SMAs. The first variable named SMA14 and the second variable named SMA25 store the corresponding information. Now, using the plot function, I request to plot the simple moving average with a length of 14 represented by the color green. Additionally, I will plot the SMA with a length of 25 represented by the color red. Now, let's not forget to label these plots clearly for better interpretation. Labels, as per this code, are appropriately assigned, enhancing the professionalism of the plots. Finally, we need to use the legend function from Matplotlib to display the legends. Pressing Shift plus Enter on the keyboard will beautifully render the plots. To complete the code, use the show function to display the plots correctly. To address the issue of cluttered x-axis dates, we use a 45-degree rotation using the xticks function. If you recall, here we use the xticks function with a rotation input of 45 degrees. With these, the x-axis dates are displayed neatly. Pressing Shift plus Enter or the Run button will render the corrected plots. As observed, the different lengths SMAs are distinctly separated. Now, instead of the number 14, I choose the number 7 for the length of the first SMA, modifying its variable name accordingly. Upon running, the behavior of the first SMA changes with increased speed and sensitivity. For added visual appeal, I also plot the closing prices in this section. To plot the closing prices, we once again utilize the plot function. For closing prices, we choose the color blue and label it as close. As observed, all three plots are elegantly rendered in this frame. Now, pay close attention to these three plots to understand their potential applications. It's worth noting that various strategies are based on different SMAs. One such strategy is the cross-up and down strategy based on short-term and long-term SMAs. In essence, if the short-term SMA crosses below the long-term SMA, the market is bearish. Conversely, if the short-term SMA crosses above the long-term SMA, it indicates a bullish market. Now, here to examine larger time ranges, I increase the number of candles from 100 to 1000 or 500. Upon hitting run, 500 early candles for Dogecoin will be stored in the prices variable. Now, by returning to the relevant section and pressing run, the plots for the larger time range will be displayed. In fact, you can plot these charts for any cryptocurrency, time frame, and candle count of your choice. Here, I consider Bitcoin for the past 500 hours. Pressing run will store Bitcoin data in the prices variable. In this section, I press run again to visualize the Bitcoin charts. As seen in the figure, the shorter SMAs in green swiftly cut above the slower red SMA, indicating an upward market movement. This occurrence signifies bullish market trends. In sections showing a range market, neither bullish nor bearish. The SMAs intertwine. Please note that this cross SMA strategy performs poorly in range-bound markets. This is because upon entering a position, the market moves contrary to our anticipated trend. In essence, this strategy is only effective in trending markets where substantial profits can be achieved. I emphasize caution with analysis from unreliable sources like fake analysts. Be careful not to be misled by untrustworthy signals. I reiterate that this strategy is not suitable for range-bound markets and should be avoided in such conditions. Well, after a comprehensive review of the simple moving average indicator, we will delve into the exploration of other intriguing indicators in the upcoming sessions. Thank you.